Welcome back. It is Thursday morning, April 23rd. Interesting price action yesterday, and interesting in a way that I say that there's quite a few intraday traders that have been a little frustrated about the follow through from one day to next. However, I want to go over something that is extremely important, especially if you're an active intraday trader. You need to absolutely have a bias coming into the day and saying, I want to be long or I want to be short, and stick to that bias. A huge mistake that traders make is they try and shift from I want to be long, I want to be short, I want to be long, I want to be short, and it ultimately ends up you're trading without any conviction whatsoever. So we're going to start out here on the weekly chart of the SPY, and regardless of whether you're using the weekly chart, which I have on the left, or the daily chart, which is on the right, you can see on the weekly chart I'm using mostly old school trend lines. I want to get a feel for the longer term picture, and then shorter time frame here we're using two moving averages, the 20 exponential and the 50 simple. But here's the point that I want to make. Although we're forming this longer term pennant, the 20 and the 50 are both clearly rising here, and obviously the short term here on the weekly is moving higher as well. So that definitively will tell you institutional order flow right now is long. The buyers are in control, even though we're going sideways for several weeks. Okay, that's the key here. Now, here's the point that I want to make. If you are in the realm of people that I get emails from that we're getting chopped up, we're not doing blah blah blah, all of that, we're going to zoom down right now into the 15-minute chart of the spiders, and I want to walk you through essentially how to make money owning that bias long-term picture with patience. Now, if you're patient, you're going to be booking profits, not adding to positions, probably being a little bit pickier right now. However, you must be prepared when you get a signal that matches the long-term bias of your criteria. And I'm going to point out two trades from yesterday that were essentially really clean trend days that set up perfectly technically, that must have been taken advantage of by you because of all the chop. Now, when you're running a business, which again, trading is a business, there's going to be waves in your revenue. There's going to be some points where you're making very clean, easier money, and everything is going perfectly, and then there's going to be other times you got to grind it out. However, mentally, you must be strong enough and have enough conviction in your ideas to hold positions when they set up perfectly. And first we're going to talk about the spiders here, and then we're going to get into watching American Express, or a trade that we called out to everybody yesterday morning. Here's the key I want to get across. Spiders long-term bullish picture, right? Coming into the day, here's the open. Let me just draw this out here. Here's the open. And then this is technically the first push off the open, right? Regardless of what's going on here, okay, you are still only looking for a spot to get long. Now, whether or not you use this 15-minute hammer, and let's say you buy a break above this window here, which is basically 209.50, all right, you get about $1.35 pretty clean there. Not that much of a sweat, right? Or let's say you zoom down to a 5-minute chart, and we look at that same window. You could have probably got in a little bit early. You had basically the same type of signal a little bit earlier, but that's not the point. The point is, you are going into the day with the bias that the long-term institutional activity is buying pressure. So you are only looking for spots to be a buyer. Period. This is what great traders do. You will sit next to a great trader and you'll see their P&L fluctuate up and down, and sometimes pretty significantly if they're a aggressive and well-funded trader, like you might find at a proprietary trading firm and whatnot. I've done this. I've seen it happen. You must trade your bias flawlessly and accept the losses that you will take, or the small profits, small losses back and forth, in exchange for when you get setups that follow through. This one day with the right size could have made up the last 5 days of frustration if you were only looking for spots to buy. I cannot stress that enough. I'm going to move over to a different stock now that had a really clean setup, and you should have been expecting it. Now, one thing that I want to point out, and I stress this a lot, there's a cycle in price action that you absolutely need to know, which is consolidations lead to volatility, and volatility leads to consolidation, and we had a perfect setup on this chart yesterday. Okay, you can see we've jumped over to American Express here, AXP. Here's the point that I want to make. The volatility leading to expansion, expansion leading to volatility. That's the point that I want to get across. So you can see here this week is inside the previous week. So we have a consolidation week. And you can see over here, more importantly, 2 days ago, inside candle. Excuse me, this is 3 days ago, inside candle. This is Monday, Tuesday, Wednesday. I'm filming this on Thursday. Okay, so Monday, Tuesday, Monday, Tuesday, setting up into Wednesday. Okay, so Monday, Tuesday, Wednesday. Here's the point that I want to make, and here's the trade. We had support down here. Both times it got down to this level, buyers stepped in and did not let it push through there. That's scenario number one. Inside week, support, big volume at both of those levels. Now here's the second part of the trade. Coming into the day, you will notice that you are going to have certain days where we contract. That's a setup. We contract 2 days in a row. The stock is coiling for an expansion in volatility. You do not want to predict direction. You only want to predict magnitude. So as you start to have these kind of days, take the opposite of that. We have pretty good volatility, larger, what I call fuel candles, followed by indecision, 3 days of indecision. Okay? That's the pattern you're looking for. You're not going to find it all the time, but when you do find it, it's predictable. Okay? So we ended up getting consolidation here, 1 day, 2 days, and yesterday all we said was expect an expansion in volatility. If you get intraday trend continuation patterns, hold to the close. It was a very, very clean, clear trade that we called out yesterday morning. Now, I'm not saying it for the fact that I called it. That's not the point. I'm trying to help you learn how to set up the technical patterns so that you can flawlessly put them into your game plan. So you're translating your trading plan into a game plan so you're ready to make money when you get the clean setups to pay for all those small losses that are driving you crazy right now. So here's the trade that we had called out yesterday, and I just wanted to point out I'm not making Monday morning quoting back here. Called the trade out 23 hours ago, and then I explained it a little bit more detail. Essentially, that means hold to the close. So when you get that type of price action, you do not want to be taking that as a momentum trade. I cannot stress enough how you have to put yourself in a position to make these trades and hold them. So if we zoom back over to the intraday chart and we take a look at the consolidation type patterns that I was discussing, here's the first half hour of the day, still consolidating, and if we really want to get some technical stuff going in here, we could draw a little bit of a pennant. So we're having a consolidation within a consolidation, and look what ends up happening. Boom, flag, boom, flag, boom, flag, lunchtime consolidation, and another push higher. When you get these trades, you must take advantage of them. I can't stress that enough.